Hey, good morning, everybody. Thank you for taking time to join the IMA Higher Education webinar this morning on strategies to mitigate cyber risks on campus. During the call today, we'll have myself, Nick White, Nick Burns with IMA, Chloe Weaving, she is with CFC Insurance. So she's the underwriter. We'll help out on any questions as we go along, talk about a couple claims examples. And then we have Tony Fardella with Wright Cyber Insurance Program, and he will discuss how Wright partners with IMA and CFC. IMA overview, we have a dedicated higher education practice focusing mainly on property and casualty, employee benefits, student and athletic insurance. We are the 5th largest independently broker in the US. And as part of that, we invest 2 times more than our peers in client services, including our cyber practice, et cetera. The program overview, we partnered with the Coalition for Cost Savings about 2 years ago, have had a lot of success working with colleges and universities throughout the United States on reducing their overall cost and increasing coverage. Over the last 4 property and casualty placements, we've saved an average of $162,000 on their overall program, which results in about 22% average rate reduction. We also have been able to help our colleges and universities with the non-monetary benefits, such as increasing limits and deductibles. Wright Specialty Program, Tony will take it from here.
Good morning. I'd like to thank, first of all, just the Coalition and IMA for putting this all together. The program, the National Education Program, has been around for about 7 years. We've been partnered with IMA for about 5 years on this particular higher education program. It is specifically designed to connect risk management and underwriting into one nice package. We're here to help you. Very specifically, we can get on the phone, answer any questions you have, and help you through the claims process. Our partners that we bring in, our brokers, are only brokers that specialize in the education sector. So these are all specialists. We do have in-house authority to quote business. The program itself is probably best in class in terms of policy form, separate insuring agreements, each and every claim, specialized rates for higher education. And CFC was rated by independent sources as an excellent partner to work with during a claim. So I'll leave it at that, and I will talk about some other things in a little bit. I guess we're going to pass it over to Chloe.
Thanks, Tony. And yeah, first of all, just a quick good morning to everyone. Thanks for dialing into the presentation this morning. I'm going to briefly review what cyber risk looks like for the education sector at the moment. We'll go over a couple of claims case studies we've seen in the education sector recently, and lastly, we'll review some cyber security best practices, which can hopefully help avoid some cyber attacks from happening straight from our in-house analysis team. So on the screen, you can just see our brief overview of how things have changed in cyber and education over the years. Although the use of computer technology has undoubtedly, as I'm sure you're all aware, brought many benefits to schools, colleges and universities, their increasing dependence on computer systems and electronic databases also makes them vulnerable to cyber losses. If teachers and staff are unable to gain access to their computers, whether that be as a result of a malicious cyber attack or just a non-malicious system failure or indeed human error, it can really result in serious operational disruption. If a hacker gains access to sensitive electronic data held, it could also have a negative impact, both financially and reputationally. In terms of claims figures, an alarming 59% of US education institutions reported a security breach or attack in the past 12 months compared to 40% of businesses outside of education. Moving on to the next slide. These are our own CFC statistics, which don't lie either. We're constantly scanning our own policyholders to see if we can get an external perspective on what cybersecurity vulnerabilities exist for our clients. So we recently took an approach where we broke down who has the most vulnerabilities to a ransomware attack throughout the policy term by industry sector. And given I'm sharing this with you all today, you're likely not too surprised to see that education is our #1 industry most likely to experience a ransomware attack due to an open RDP port or lack of MFA. We'll move on and go into a bit more detail later, but RDP stands for Remote Desktop Protocol and essentially allows people to log into the network remotely, kind of like a gateway between external systems and your internal systems. And if that port that allows that to happen is exposed to the internet with an open port, it can easily allow hackers to access the network and get into systems. And just to give you an idea, an open RDP port or lack of MFA for us at CFC caused over 80% of our ransomware attacks at CFC last year. But more on that later. So before we go on to claims case studies, I would quite like to briefly answer the question, why is the education sector being hit so hard? Put simply, education institutions are making it too easy at the moment for criminals to get in, and it's too profitable for them to stop. And although we hear about things like Colonial Pipeline or huge national healthcare systems or cyber insurers and brokers hitting the headlines for attacks, for every one of those you hear about, there are thousands of schools, universities and colleges getting hit that we don't hear about, because criminals actually aren't going for those who are valuable, they're just going for those who are vulnerable. Education establishments often actually have the perfect blend of being both, and criminals want the path of least resistance, so they work on the mantra of do what's quick, safe and lucrative. And they know that many schools, colleges and universities do lack some security controls, because understandably, ultimately, you have to make tough choices on where to spend budget. And historically, protecting data hasn't been one of those business priorities. What we've seen in the past couple of years is that cyber insurance has really reached its adolescence, and we're really at that inflection point in the market where we're now looking at a very rapidly evolving threat landscape and trying to see holistically what we can do to ensure that cyber coverage remains as broad as it is, because that's what coverage our clients are asking for, but importantly in a long-term and sustainable way. I'd like to just cover a couple of claims case studies. I thought it would be helpful to talk about a ransomware incident because it's what everyone is talking about these days, and without a doubt the most common claim that we are seeing. This one I'm going to discuss with you was one that we dealt with along with Right Specialty very recently. This was a university, relatively small at 21 million in revenue, who were the victims of a ransomware attack of the SunCrypt variant in early January of this year. The attack encrypted 400 workstations and 30 servers, along with all of the physical backups. So essentially the university's online operations ground to a halt. Now, in many cases, it's possible to mitigate ransomware attacks by recovering from backup. However, the backups were contained on one of the servers encrypted by the ransomware, rendering them useless. So in this case, the university had no choice but to make payment for the decryption keys, in consideration that at this point, the threat actor had already posted stolen data online, including social security numbers. There had been a denial of service attack on the primary server, and there had been multiple phone calls to the university. So along with hands-on support from CFC response throughout, the university managed to negotiate a hefty 600k ransom down to 378k, and then began the task of rebuilding environments and improving cybersecurity, importantly, so they didn't leave themselves vulnerable to subsequent attacks. Of course, all of this investigation and improvement to security all cost money, and to give an idea of how long these matters take to finalise, the incident closed just last week, having cost just north of 500k. The next case study, while smaller scale, is just an important one to highlight because of the security questions it raised. So this scam began when the bursar, the individual responsible for managing the school's financial affairs, fell for a credential phishing email. So a malicious actor emailed them from what appeared to be Microsoft, innocuously kind of stating that he wanted to continue to use, if he wanted to continue to use the email account without interruption, he just had to validate his account details online. So the bursar clicked on the link provided, which took him to a very legitimate looking landing page where he innocently inputted his email login details and thought nothing of it. The landing page was of course fake, and the bursar had unwittingly volunteered his email login details to a fraudster. What's more, and the reason why I wanted to bring this claim up in particular, is that his email account didn't have MFA in place. So the fraudster was then able to gain access to his whole account remotely and gather valuable information. In particular, the fraudster was able to locate a spreadsheet stored on the bursar's email folder containing a list of email addresses for the parents of current students. He spotted an opportunity here, and the fraudster set up an email address that looked very similar to the bursar's, but with an extra letter to the address line. He carefully selected parents living overseas. We presume this is just because overseas school fees were more, and he sent out an email relating to the payment of school fees. The email stated that parents would be eligible for a discount of up to 25% if they paid for spring and summer terms in one lump sum. And this is we see this very regularly with social engineering attacks. They rely on manipulating and exploiting very typical human behavior. And in this case, the fraudster was aware that by providing a financial incentive, the scam would have a better chance of success. Unfortunately, this offer proved too tempting for some, and 8 parents fell for the scam, with tuition and boarding fees costing north of 12k per term. The amount paid out by each parent amounted to some $18,000. Unfortunately, by the time the scam was noticed, only one of the sets of parents were able to get money back from the bank. So the rest were out of pocket to the tune of $144,000 collectively. So what now, I guess? What lessons can be learned from the claims that we're seeing? I think very importantly, alongside a comprehensive cyber insurance policy, it's important to have a look at the security controls in place and how they can be improved. I'm sure MFA, multi-factor authentication, is not something new to many of you on the line. We really are hammering home the need to secure remote access to the network with MFA. Just briefly, MFA works by requiring users to authenticate themselves when remotely logging into the network. So typically this requires a password to be entered as the first authenticator, and then that's followed by either a passcode or token generated by a mobile app or SMS message, or you may have seen physical tokens that you can use as well. So this can really help prevent unauthorized access, as the threat actor would need to have both user credentials and have access to the second form of authentication to gain access to the network. I cannot recommend this strongly enough. And it's recommended whether you use RDP or VPN for remote access. And just some other best practices. The first one being email security. This is a big issue for three main reasons. The first one being that email accounts can contain valuable information that cyber criminals might wish to access. The second being that having access to an email account can easily allow the criminal to impersonate the account's user. And the third one being that sending phishing emails with malicious links and attachments can allow threat actors to exploit that human error aspect and gain access to endpoints and infiltrate the wider network. So we think the following measures can help improve an organization's email security. I'm going to say it probably 50 more times by the end of the day: securing all mailboxes with MFA for any remote access. As you can see on the screen as well, some form of email filtering software where there are regular reviews to look for potentially risky sign-ins and mailbox rules. The second best practice that again we're finding is playing a huge role in the claims frequency and severity is some employee awareness training. So human error plays a massive role in the vast majority of phishing scams, but raising awareness of such scams can really help reduce the risk of an employee clicking on a malicious link or attachment. Tools these days are readily available that can send all of your employees, all of your teachers, fake phishing emails to test and better prepare people for a real life incident. And finally, and definitely not least importantly, having an appropriate disaster recovery plan. So this needs to include backing up data frequently. Full system backups should be carried out regularly. I'm aware regularly is not black and white. This will ultimately vary depending on the size of the organization in question, but I would say monthly full system backups are usually a prudent measure. On top of that, daily incremental or differential backups of all critical data should be used to supplement this. Ultimately, the more frequently data is backed up, the less data there is to lose. These backups should be stored securely. And in an ideal world, you would create multiple backup copies. So having more than one backup copy is a prudent measure, because if one backup copy is corrupted or destroyed, then another copy would be available. And ideally, the copies should be stored on different media, i.e. one backup online and one backup offline, to prevent both copies being impacted by the same event. And just lastly on this slide, regular testing of said backup procedures. And just to end from me, just some statistics on the screen that we're seeing generally in the cyber insurance market. Because of the frequency and severity of claims increasing, we're seeing general rate increases in the 35 to 50% range, very dependent on industry, ransomware controls, and prior claims history. This percentage can easily be higher. Direct loss ratio for standalone cyber insurance rose sharply in 2020 to 73%. And AM Best states that ransomware now accounts for 75% of all cyber insurance claims, which is just what we're seeing in-house at CFC. And finally, due to catastrophic losses, carriers are actively managing their capacity. This is an important point. It's been a turbulent time for the cyber insurance market, and particularly for new players in the insurance market. Capacity, or gaining capacity, has been really difficult. Some carriers are pulling out of industry sectors altogether, and education, I know, is one of them that's been hit the hardest. Luckily at CFC, we feel at the moment that we do have an appropriate process to keep writing. We don't like pulling out of industry sectors as a whole, but yeah, just to give you an idea, it has been an extremely turbulent year for many other carriers.
Great, thanks, Chloe. Chad, let's go ahead and go to the next slide. Tony, I think you're going to pick it up here.
Yeah, I'm going to just piggyback off what Chloe had discussed, really. The loss ratio in the overall cyber market has increased dramatically. It's, again, over 70%, which is up 30-40% from last year. Ransomware attacks are up. Higher education was hit really hard. And we're finding out that many of our clients, customers, were not really readily prepared to deal with a ransomware attack. One of the nuances that is we just saw happen on one of the claims that Chloe had mentioned. Towards the end of the claim, the state got involved and did an investigation into the college in terms of why this happened. And this, I really hadn't seen that before, but now we're seeing more of those type of claims. And those are, again, state investigations. There is a act introduced in the Senate called the Ransomware and Financial Security Stability Act. Although it's designed to apply to very large financial institutions, though currently the way it's written, that any government agency may be dragged into this, and the payments of ransom are limited to only $100,000. So they're trying to, the government, the federal government is trying to cut off these ransomware claims that have been happening. Some of the best practices that we talked about really come from the NIST cybersecurity framework, which is kind of the big overview of things and best practices that should be done. One of the basic things is the having the data off-site. Many times we find that the data is left on the server and the server is corrupted from the claim, and they got to start all over again. And again, this is some of the IT folks know it is the 3-2-1 process, which is 3 copies of the data on 2 different forms of media, and 1 is off-site. They're also looking at many other things. If there are any legacy systems still in place, you got to get those phased out because those are very vulnerable to cyber attack. And basically they're going to look at how well have you monitored your system for a ransomware attack. Are you prepared? Are you ready for intrusion? What management tools are you using for cyber intrusion? I guess that's it for that one. We can go to the next slide. So cyber insurance, it was at one time, years and years ago, more of a luxury or kind of a want more than a need. 20 years ago, this insurance started out, and when we first were writing policies way back then, they were really just liability policies. They didn't really take into concern any of the first-party losses that could be incurred. Now, the first-party losses are the basic, are driving the claim cost in totality. Insurance for obviously just to transfer the risk to an insurance policy. You're mitigating your loss to the insurance company will pay instead of you paying it. One of the most important factors is when you buy the insurance policy or purchase the insurance policy, you get a response team that has handled many of these claims already. So they're able to jump in and assist you very quickly in finding out what the problem is and getting your system up and running. Again, we're seeing increased suits against directors and officers for this. And there's also, the reputational harm to the school. We've seen, a lot of claims on that area as well. So you got to be prepared. You got to work with your broker. Make sure your controls are in place. And again, I know Chloe said it a million times, but you got to have your MFA installed and implemented and ready to go, along with all the other, cybersecurity protocol.
Thanks, Tony. So where do we go from here? When thinking about the risk that we're all facing with cyber, we were having an internal prep call earlier this week before today's presentation, and Chloe had just returned from a 12-month maternity leave. She lives in London, and she made the comment that, she goes away to enjoy the birth of a child. She comes back 12 months later, and the whole world has been turned upside down as it relates to cyber. So this is something that just over the past 12 to 18 months has changed dramatically. And one of the services that we provide our clients, and as well as private colleges that are part of the coalition, is complimentary access to our eRisk Hub. So there is a code that you need to log into this. So please reach out to the contacts that will be listed at the end of this presentation to get that. But this portal is going to give you some tools and resources to help you better understand cyber exposures, to work on an incident response plan, case studies, and just a general portal to get all information related to cyber. So as part of everybody's involvement with the Coalition for College Cost Savings, we will follow up with that code and that material. Chad, let's go ahead and go to the next slide. This is just a summary of what's going to be available in that eRisk Hub. We partner with TechAssure to provide this, so it's a very comprehensive database with a breach cost calculator, case studies. The incident response roadmap is critical, so that if your private college is hit by one of these ransomwares or attacks, do you have the internal procedures set in place to respond to these? And then just a general news center. I think the second story that Chloe referenced was great, because it was a smaller attack that maybe is flying under the radar right now. But this access to this portal is going to provide you with stories and just brainstorming on what we're seeing in the industry. So at the end of the day, what IMA provides as a broker is a independent review of your insurance portfolio. So we've had a tremendous amount of success over the past 2 years working with private colleges. What we like to offer up is a complimentary assessment of your insurance program along with your cyber insurance. So we will provide an internal review done by our higher education team to help private colleges try to drive down the cost that all of us are facing heading into these renewals. So we thank everybody for their time today. We are going to open it up for questions. I did see that one came through the chat room. We'll take a look at that question. But if anybody has any questions, please leverage the chat room right now, and we'd be happy to answer them. Chloe, I do have one for you that came up on a similar call that we did last week. What happens if a private college does not implement MFA? How does that impact the underwriting of that account?
It's an interesting question, and one that I definitely would have answered very differently a year ago. A year ago, it wouldn't have really been much of an issue, but honestly, we're seeing the lack of MFA have such a major impact on the likelihood of a college having a claim that on the whole these days it's really a prerequisite to getting any form of cyber insurance. On the smaller side, we may be able to consider it on the proviso that they have it put in place with the help of CFCs response team within sort of 30 days. But on the whole, it really is just a prerequisite to getting cyber insurance.
Great, thanks. And then we did have this question come through the chat room. I'll just go ahead and read it if you can't see it, either Chloe or Tony. Jerry Huff makes a comment that they have found that the average amount of time that an attacker has been in a system prior to sending ransomware is 9 months. So with that in mind, how far do you recommend having backups?
Well, that particular reference was called the dwell time, DWELL. That's the time from when the computer criminal first plants the seed into your computer and the time when you actually find it. It is 9 months. That's the average. So it's, not a good thing to talk about in general, because, it's really the time that the cyber criminal has been looking around the system and poking and finding things. So obviously to cut that down would be good to do. And in terms of backups, I'm not sure what the higher education rules are in every state, but usually there are guidelines that you have to keep data for so many years, and it all should be stored offline as well.
Great, thanks, Tony. It looks like we had one more come through. It looks like it came through to me. Maybe Chloe address this one. So if I'm a risk manager at a small private college, capacity is being stressed in the market, limits are being pressured, retentions are going up. Where do you see the cyber insurance market going in the next 12 months, and how can I prepare for that?
Again, another very good question to whoever asked that. It's so difficult, and I don't have a crystal ball. I could not have predicted where the cyber market would be now 12 months ago or even 6 months ago. So I could only have my best educated guess, which is, I think we'll go very much the same way. I think, as I've mentioned, frequency and severity of cyber claims, and particularly ransomware, has gone up in the last year. Things are plateauing on the whole, but I think in the next year, I predict that we will still continue to see rate increases. We'll continue to see additional due diligence being carried out for colleges and universities to have cyber insurance put in place. And I think just far more focus on security controls being put in place alongside a cyber insurance policy being bought. I'm really hoping that the ransomware incidents maybe 18 months ago used to cost hundreds of dollars, and now they really are on a daily basis costing millions of dollars. I would really hope they're not going to increase from there. There's more involvement from bodies such as the FBI. However, I think the concern is that cyber criminals are often one step ahead of us. I would love to think that in the next year or so we can get one step ahead of them, but who knows?
Great. And then we had a follow-up question from Mark, and maybe Chad, we can go back a couple slides, because I think we talked about it at a high level, but Chloe or Tony, Mark asked, what are the top 3 to 5 safeguards to put in place? I think this slide highlights it, and I think there's no question that MFA is top of mind. I read a stat that 90+% of these cyber attacks could have been avoided with MFA in place. So I think that is the number one safeguard. But maybe let's talk about the next 2 or 3 as it relates to this slide, and which ones would be relevant, Chloe or Tony?
Yeah, Chloe can answer that one from her perspective, from an underwriting perspective, really. She can answer that question.
So, Nick, I completely agree with you. MFA is front and center of my mind always when talking about when talking about safeguards to put in place. That's both on email accounts and for remote access, as I've mentioned. The second one on this slide, endpoint detection response solution, is again, I would say in my top 5. Data backup procedures being the third one. These are all ones that I would choose. Having a comprehensive backup procedure, testing it regularly. Patch management, I think, again, is quite an important one. Having some form of solution where you are regularly patching. And I think one thing I would add that's not on the slide that I spoke about earlier would be some form of employee awareness training, just because of the human element of many of the claims that we're seeing. So I hope that answers the question.
Yeah, I think it does. And I think, a big takeaway from this would be, any questions on this would be, talk to your IT staff to make sure that these procedures are being met, especially as you go through the cyber renewal application process. But these are conversations to have with your IT staff to make sure that you are implementing all of these within your private college. It looks like we have another question from Jerry. I don't know, Chloe or Tony, if you can see this, but he raises a good point about MFA in that, the insurance companies are making sure that it's implemented across the private colleges, but sometimes he's seeing exceptions. So there's a various scenario where MFA might not have to be in place. The cyber insurance gets placed, but will a claim be denied if one of those exceptions is breached? Does that make sense?
Yeah, I mean, basically on very, very small accounts, the underwriter might not put as much weight on having MFA in place if there are other things in place. So, Chloe, you want to comment on that as well?
Yeah, sure. So the short answer is no. At CFC, a claim wouldn't be denied. We often see, you're absolutely right, Jerry, who asked the question. All we're able to do is take a snapshot of your cybersecurity controls when you complete that application. What we ask from you is you be as honest and upfront as possible at that stage. If you have regular exceptions as to when MFA isn't being used, we might not deny you cyber insurance, but we might make some recommendations on how that could be implemented on a more regular basis. But yeah, the short answer is no, a claim would not be denied. And very often with claims, we see schools, colleges, universities with excellent security controls in place. And it is just that one time where something fails or something wasn't tested that a claim happens. And no, we're not denying those claims.
Great, thanks. Well, it looks like that's the end of the questions. Thank everybody for their time. Chloe, thanks for dialing in from London. Tony, thanks for dialing in from New York. We had a tremendous response to this webinar. We will follow up with copies of the slides along with the Cyber Risk Hub information flyer. And there's also going to be a recording of this if there's anything that you want to share with any of your colleagues. So we will send these out after the call. And then as a point of reference, if anybody has any questions, you can reach out to your designated account person if you're already a client of IMA, or feel free to reach out to Chad for some follow-up information. We're going to wrap it up. It looks like we got one more question. So if you need to drop off, that's take advantage of your time and do what you need to do. But we're going to go ahead and answer this last question from Jerry. What specifically is the definition of advanced endpoint protection? And can you give some examples of vendors that provide this?
Chloe, I think, would be a good person to answer that because she deals directly with a group of vendors on her end that specialize in this area. So I'll throw that one to Chloe as well.
Yeah, so I'll give you a brief description, and sort of bearing in mind I'm a cyber underwriter rather than, I don't work on our CFC response team. They could give you a far more in-depth description, but effectively an endpoint detection and response solution is it's an integrated sort of endpoint security solution that combines. They do real-time continuous monitoring and collection of endpoint data with rules-based automated response and analysis capabilities. They're essentially just looking for vulnerabilities on a continuous basis. I can certainly follow up with our CFC response team to give you a couple of our recommendations of EDR solutions that the majority of our insureds use, if that would be helpful.
Yeah, Chloe, I think that's a good idea. We will follow up directly with Jerry on his question relating to that. So we'll follow up with you on that. Well, great. Well, thanks everybody for your time. Hope everybody found this informational. And if anybody has any questions, please reach out to Chad, and we will stay in contact with you and be on the lookout for a recording of the webinar, as well as a copy of the slides. And I hope everybody has a great rest of the day. Thanks for attending.
Everyone.
Thank you.
Thanks.